Hello guys, welcome to ARCS. In today's Wednesday, the video of the price time, the price and time method. So you're gonna talk about the price and time method and show you, as always you do, a trade take on the price and time method and window as well, and the trade that happens today as well. So on the price and time method as well. So, and as you can see, he took a trade yesterday. As you can see, the results here. All right, it's still open, so you already bank a few profits. Let me show you. You already bank profits on this trade and still have a little runner on it. So this is going to be the last target, as you have the main structure to the downside. So you expect the market keep going down. And how we take the trade yesterday on the price and time method, and how today happens almost the same. And yeah, we're gonna show you. So yesterday, take a trade around here. So if you go to the 5 minutes time frame, first, as I like to do, you come to the daily and you can see was a daily order block there. Perfect. That was the market respect. On the 4 hour, you can see the market's build is a fake order block there. So that's how we call a trap. And as you can see, equal highs there. So another order block above is going to be part of the daily order block, and the market, as soon as the market swept that liquidity, taps into that order block in reverse. So you expect that happen, but you don't take the first trade here, because after this break it doesn't make sense to trade just from there. I need the confirmation. So in from that confirmations, I wait to see the market break structure to the downside after swap the liquidity. So you can see the liquidity is being swept around here, and then it breaks through the down. So and you see this break of structure. So now as you see this break of structure, what you expect, the same as you expect around here. You see this is an order block, is very clear order block. So you normally take this as a trap, and based on that method you use the same on here. As you can see, is still a trap. So, and you can see the market swept that as a liquidity as well, a relative equalize, taps into that level. And now if you go to the lower time frame, 50 minutes or even 5 minutes, if you go to the lower time frame, you can see after the market swept that order block and taps into that level, the market breaks structure to the downside as here, and then build more liquidity there, and you take a trade around this level. So you take a trade here, there, after you have the confirmation of the level is gonna hold it. So after the market swept that order block, you wait for the market break structure to the downside. And if you look at that, it was on the New York pricing time window. So, and that time is going to be between 1.5 to 3 o'clock, and this was exactly 2:35. So perfect inside the time window. So it's basically the same thing over and over again every single day. So, and today, and that's the trade you open, and still open that trade. You already bank profits, as you can see here. You already make profits on this trade, take on that time. And as you can see, it's still, you get confirmation. And normally I don't like to add positions on the trades I already have open. So normally I'm not a scaling trader. So I like to have one position per pair, and let the trade running. And as you can see, guys, I'm it's going to be very rare to see me add a lot of trades in the same pair. I'm not going to do that. So anyway, today exactly basically the same. So what you expect is a market drop. So the market break this structure here. As you can see, the market structure breaks perfect as you expect, because you are in the bearish market. Remember the main break of structure. So one break of structure, another break of structure. So, and this is the thing. This is the trap, as he been trying to explain every single day. He made a video. So in here you can see this is a trap. How many people are waiting to sell here? Stop loss above, and they get swept out, and then the move happens. So that's exactly what he expected. He expect these levels being taken out. So because if you see the move, that move break this internal structure. So this is the trap. confirm that the market is going to keep down. As you can see, there's going to keep down, going down, but they need to swap that because that's a trap. That's how most of people call the pool of liquidity, because a lot of people are waiting for exactly that position here. So that's why the market swept them. That's called manipulation. So I was expected the market taps into this level, but was very close, very close. I always say when you open the trade, when you want to open the trade, normally use like one peep above or below the level you want to trade, because sometimes the spread can trick you. So but yeah, that was our time. It was exactly 8 o'clock, so it was being inside the time window of London. So as London opened, the market swept the level very close to top here, but it can take that in consideration because that's the candle, that's all this level been holding the market's tops. It take this in consideration as a trap and that as a liquidity. The market takes the liquidity. That's going to be a nice level to take the trade, because you already have the confirmation the market is going to keep going down. You just need for the liquidity is being taken out, you get in and you in profit. You should get out some profits around this level. You already take out as you do. As you can see, it take a few. You still have a runner, as you can see here on the top of the screen, and you're gonna keep going because our last target is gonna be here. And that's how it is. The time in price window. That's how it works. Thank you so much for watching, guys, and see you on Friday.